Jim Cramer answering your Twitter questions on the floor of the New York Stock Exchange. Jim, there's a couple of stocks we talk about a lot: Google, Netflix, Apple, Facebook. So somebody writes in, listen, if you don't own any of that, they've had this huge run, do you wait for a pullback to buy?
You know, I traded with Cramer for 19 years, and I'm going to fall back on our rules, which is you miss these. Now you have to wait. That's the penalty you have to pay. You had to buy them when nobody wanted them, and you can't just come on top of buying them now. If that disappoints you, I don't care. I frankly don't care at all, because my job is to try to, initially is to not hurt you, and then hopefully to help you. So you missed it, now you gotta wait for a pullback. If you don't get a pullback, you missed it. That's the way life is.
All right, we're knee-deep in earnings season. What do Verizon's earnings mean for AT&T tomorrow?
Well, ATT has got DirecTV. ATT is a kind of a bond with a 5% yield. I think that their balance sheet's actually improving, but Verizon shows you that T-Mobile is beginning, I think, to really impact pricing, and it's going to be the same thing with ATT. ATT is a hold. I mean, it's a treasury.
Few commodities questions. Will we see oil bottom after a huge one-day decline?
We need that giant whoosh. We need the whoosh down to 40.41. I have a piece in Real Money about how could I have been so wrong in oil. I like to own the fact that I'm wrong, even though that then makes people say, hey, what an idiot Cramer's, like I care. You know, 317 million people, be my guest. I'm resigned to the fact that I was early in oil and that I was wrong. And that's just sometimes what happens.
All right, well, I'm never going to say that about you. Let's stay with commodities and turn to gold. What do you think of stock symbol DUST, the Direction Gold Miners Bear ETF?
Well, that's an interesting idea. ETFs recalibrate every day, and that makes it so they're such losers. I don't like the gold stocks, with the exception of Randgold, and that's because their finding costs are so high. If you want to fool around with one of these ETFs, be my guest. I've never recommended them. I don't even think they should have been invented.
All right, let's move on to this stock, a Biomed. One person's been following it for a while, thinks there's a large future potential. Any thoughts on that?
You know, I like that. They've been on Mad Money, and I totally agree with that viewer. I think there's a lot of excitement there. I like Edwards Lifesciences, my favorite in the group, and then St. Jude.
And finally, somebody asks about Fannie and Freddie, saying you recently tweeted you like the junior preferred over the common stock.
Well, the common stock, I mean, I don't really care for either, but because the Treasury has told me over and over again there's no value here. But I think the junior preferred, the preferred has certainly a much better court case than the common. Bill Ackman, at Delivering Alpha last week, started the common as his favorite idea, and I immediately cautioned people because I just think that the common, I think, has it's a battle of standing, and the common has the lowest standing. So I mean, I'm not going to therefore endorse it. 2 goes to 2.5. I don't know. That's not the way I'm not a trader. I'm just not a trader.
Jim Cramer, as always, thanks.
Thank you.
I'm Rhonda Schaffler for The Street.